Talking about the mega bank merger, HDFC as well as HDFC Bank. So let's understand a little bit more about what the outlook is from an ex-employee as well as from the fundamental side, and get in a take from Chandan Taparia as well, who is joining in as a technical analyst. So Gurmeet, first up, any regrets?
Oh yes, absolutely. But trying to make up, but by doing a stock save for long. But I think it's a quite a milestone day. I spoke to some of the ex-colleagues in HDFC Limited. Emotional day for them as well. But I think the merged entity is quite a behemoth, as you rightly said. There will be initial concerns because their loan to deposit ratio is on the higher side, around 109%. They will also probably have to issue some more affordable housing bonds, etc. And it must be elevated, which will have some impact on ROEs, etc. But also the mortgage business has lower cost to income, and HDFC is always has a control on credit costs, which means that operating leverage can make up for some fall in ROEs. So some trade-off can happen. But I think it should continue to do well, and we remain constructive now on the much bigger, larger entity.
But Gurmeet, you think it can replicate the magic? And I'm purely talking about HDFC Bank here, for instance. And, now with the combined entity, can it really replicate and run at the same growth rate or run rate as it has in the last 2 decades?
Actually, Asha, it has actually. It's just that what has happened is that earlier only HDFC Bank used to grow 20%. Now you have some other banks which also grow, right? So forget about the stock performance. The stock was about 1,000 odd, right? 5-6 years back. Today it's at about, let's say, close to 1,700. So that's like 10-11% kind of return if you analyze it, right? Lesser than, let's say, an ICICI Bank post turnaround and even Axis, right? But if you see the business performance, keep the stock performance aside. Last, for example, FY17, their loan share was 7%. Right? Today it's 11%. I'm not talking about the joint entity. Joint entity would be 16%. So it's grown like 1.5 times, the industry. If you see the deposit growth, which I think would be the main focus now, next 1 year, they were at 6% in FY17, and now they're at 10%. In fact, last year they demonstrated 21% deposit growth versus industry average growth of being 10%. So if you take the 10-year CAGR also, right, on loan and deposit, it's 20%. So I don't see any reason where they can't clock, that 18-20% growth rate. As I said, but initially the ROEs will probably take a knock because of the nature of the mortgage business. But even if you look at it, that on a valuation wise, the combined entity is what, 2.4 times and about 15 times earnings. I mean, that's not. I've not seen HDFC on those valuations for a very, very long time. So I think we have to consider both the valuations and how the entire things change. So I remain constructive, and our largest bank is 25 lakh crore balance sheet. I mean, that's what, $300 billion. I think we have such a long way to grow as the economy goes up from let's say 3.5 to 5 trillion, which is the next milestone.
But Gurmeet, what levers do you think would enable this kind of growth once the ROE adjustment is done with, and which is, I think, is only going to be a near-term phenomena, like you highlighted?
So a couple of them. I think what they've done well and is that they have expanded branch network. They've been adding 1,000 odd branches, especially building branches in semi-urban and rural. They added almost 1,500 branches last year. So they've clearly done a great job there as far as. So I think a lot of those branches which they have launched in 4 or 5 years, some of them will mature. Branches take time to start making money. So I think that will help. I think where they missed the bus a little bit, in my view, was technology. I think, but now the technology spend has also picked up. And to couple it, they had leadership change, they had some issues with RBI, they had tech glitches. So a lot of it also coincided with the leadership change, I think. But now I think things are shaping up well, and I think that investment will pay off. So if you look at their market share, they've done always very well in retail. If you look at the market share in commercial and rural banking, that's gone up by 100 basis points last year. Even in corporate banking, I mean, they are the ones who are now got aggressive on corporate banking much earlier than the peers. So I think they have it in them, and best part about is that they have demonstrated that in various economic cycles. I don't recollect HDFC NPA being more than 1%. At least last 15-20 years, I'm tracking the stock. Maybe in a COVID period, it would have marginally gone up, right? But so that's I think they should be able to do that. But the only thing we need to, as I said, watch out for. Watch the deposit growth, how well they do that. I mean, they did 21% deposit growth last year. If they can sustain that over 2 years, a lot of this ROE can be offset. Second, the loan book looks much better now. So it was 30% unsecured pre-merger. Now, post the mortgage business coming, it's now just 22% unsecured. So I think even on the consumer lending side, where there are the new age guys also, I think that could be the other lever which they can leverage on, because basically the investments they have done on the branch network.
Chandan, for those, in HDFC, and trading the stock, that's going to be expiring in the F&O today. HDFC is what I'm talking about, right? It'll cease to be an entity. Everything will be settled physically. Tell me, what do traders and investors need to ensure before the closing date today? I mean, I'm guessing they'll have to close all their positions before expiry, right?
I'll talk 2-3 points here related to technical and derivatives post this merger. So this is the reverse merger, and I think most of the visionary are talking that is very good for company point of view. Cost of funding will reduce significantly. So when I talk about stocks as of now, there will be change in the weightage, and that is going to be significant compared to the trader, those who are trading. And there will be inflow and outflow in selective counters, because there will be the realignment of the weightage of the most of the banking counter. So as per the rule, the Bank Nifty takes the stocks as per the calculation of the weightage of market cap method, free float weightage market cap method, and accordingly no stock exceed more than 35% of the total market cap. So accordingly, HDFC Bank the weightage of the HDFC Bank will move by 2% from existing 27 to 29%. And because of that, some flow will be there, bank, because of the Bank Nifty. Now, as the flow of HDFC Bank will increase, so ICICI Bank weightage will fall by 1%. And stock specific, the weightage will increase in IndusInd Bank, Federal Bank, IDFC. So some positive bias could be there because of that. While at the same time, Axis, Kotak will see a decline in the weightage. So some selling will be there. So this is based on the weightage and realignment of because of this merger. Now, those who are holding the position, they are suggested to exit the position before the expiry. And those who are looking for technical point of view, let the this contract happen, then only we can understand. But as of now, looking at the existing price pattern, we believe that stock has bullish setup. So I believe that overall momentum could pick up. And I think because of this merger, also the Bank Nifty is getting some consolidation. Once the clarity will happen, the momentum will continue. So these 2-3 things keep in mind. Exit your position before the expiry. Wait for the new contract. Let the settlement happens. And weightage part you need to keep in mind. It will give the inflow and outflow to the certain stocks.
Okay, so given that all existing monthly and weekly contracts of underlying HDFC, they have, if they are post with expiry dates post July 12, they shall expire today itself. Correct, Chandan? And what's just your outlook in terms of the trajectory?
Yeah, so see, as per the outlook, we have seen a strong run-up and then decline recently. So I don't think there will be major swings because of this reason. But technically speaking, we have seen some put writing at 16 immediate strikes, and the stock is trading near to 50-day exponential moving average. So already we have seen correction from higher levels. So that's why I think some stability will be there. So don't see major short covering kind of trigger or major inflow kind of boost. So some sort of range bound bias will be there in the counter, even for expiry setup. But those who are holding the position in options or in future, they exit before the expiry or before the contract end.
Okay, appreciate your time, Chandan, as well as Gurmeet. Thank you so much for highlighting for us all of the details with respect to the Behemoth merger between HDFC and HDFC Bank.